Dale, welcome to the Income Flip podcast. I appreciate having you on, my friend.
Good to be here, Rob. Thanks for having me.
Hey, well, I see that you're out of Minneapolis. I would say I have such a hard time saying that for whatever reason. You are the first podcast guest from that area, and welcome to the Income Flip podcast, where we help entrepreneurs essentially convert their active income into passive income. And I want to learn about your journey and your story. So, Dale, when did you get into this business? Tell me a little bit about the evolution of you and what you guys are doing today.
Yeah, the business itself, it's really almost been a lifetime. When I was young, I worked in construction a little bit for a few years. Then I spent some time in the banking world doing mortgage banking and then doing some development and construction lending to builders. Spent some time working for a company that we actually created a city. That we created our own water infrastructure, sewer, built a golf course, brought in the grocery store. That was a ton of fun. Started my own home building company, sold that, worked for a national real estate company. And then 2008 happened. A lot of things fell apart. And I was like, well, I'm working for a company. I want to go work for myself again. And so 2010 laid the groundwork. 2011 started my own company again. And that's what brings us here. And I mean, it's the funnest thing about being in real estate is, I mean, you're creating things that are pretty cool, that last, that people get to enjoy for way beyond my lifetime.
So, out of curiosity, why did you sell that first business?
I had a business partner, and he was in his late 70s, early 80s, and he wanted to be liquidated and get out. And she said, most logical thing is let's just sell the business to somebody that's interested in it.
What year was that?
That would have been 2004, late 2004, early '05, right in that time frame.
And that was a home building business?
Yeah. Yep. We were just strictly a production home builder.
Okay. So that was a good time to do that?
Yeah, we were really pretty fortunate on the timing. That was not because I was really smart. I was just really lucky.
Well, that happens, right? Like it's always a combination of what you know and timing in life.
Yeah.
So production building isn't easy. So let's kind of go there. I mean, I imagine, there's a lot that goes in. What were your biggest takeaways in running a production building company?
The key, I think, for production building to really be successful is you've got to simplify the process. As you said, it can be really complex. There's so many moving parts, so many different decisions to be made, and you're dealing with 80 to 100 different trade partners potentially on a house, and so it really could be complex. And we've really looked at it and said, how do we simplify that? Not only for the process, but for the consumer. If you're wanting to build a custom home, we're not your company because we don't go in and really customize it. And those guys are really smart and do a great thing. But the average consumer is saying, I'm buying my first, second, third home, and they just get overwhelmed with options. And we used to have a lot of options. We had hundreds, if not thousands of options.
A confused mind makes no decisions.
Yeah, that's exactly right. And so what we found is we really looked at it closely, and there was two things that we found that were really interesting. One was the more options somebody selected, the less happy they were. So we would do surveys before we'd start the house, midway, at the end, and at 9 months. And the more options they chose, the less happy they were with what they had because there's just too many unknowns for them of what will this look like together. The other thing we found is a high percentage of what people picked was what they saw in a spec home or a model home. So with that, we said, well, what if we eliminate the options and really zero in on what the majority of the buyers want, and that's all we offer? And so we've done that, and we've eliminated all of the options. And so if somebody wants to do some customization, you've got to do it after the fact or buy from somebody else. But it's really simplified the process. It's helped, our trade partners, there's less risk of error for them. So it helps them to be more successful. Our buyer satisfaction has gone up pretty significantly with that simplification. Our ability to service and take care of any outstanding type warranty type issues has dramatically improved. So it's been a positive thing, but we're really filling a need for a very, very specific demographic and buyer.
And we're going to unpack that here in a bit. I want to fast forward just a bit from when you sold the business to then in 2008 when Lehman Brothers is filing for bankruptcy and the world is completely imploding, and you're like, hey, I'm gonna go and start my own business again, right? I know you started in 2011, but it sounded like 28 was where the seeds of that started germinating.
That's 08, 09. It's like, okay, wait a minute, I've got to do something different here.
Okay. And what was the inspiration for that?
I love making things happen. And when you're working for somebody else, you're limited on that ability. I love creating things. I love making things better than we found them. And you do have some limitations when you're working for others. And, the market was going to get worse before it got better. Yeah. And I'm an entrepreneur at heart. And so, I'm looking at it going, there's going to be some real opportunities to seize coming right away. And I'm not going to be able to do that working for somebody else. And so that really was some of the driving things.
Interesting. Yeah. You were playing the long game. You knew that the cycle was going to end and things were going to get better, right? And there's some wisdom in that. So today you guys build a lot of houses. Let's talk a little bit about that. Tell us what the business looks like today.
We're involved in quite a few things. So we have a land development company that we develop land. We've got a home building company that builds homes, and the homes that we were just talking about is what we focus on. We do have an arm that does some apartments, a little bit of commercial. So we're really spread out a little bit, doing everything that's real estate. And we're currently focused predominantly on the Minnesota market, although we've got some intentions coming up. And then just recently, we started a real estate equity fund. It's an interesting note. About 2 years ago, I was looking at it going, we that are in real estate have the ultimate tax benefits. Congress has really written the tax code to say we want people to invest in real estate. We want people to do this, and we're going to benefit if you do. The problem is if you're not considered a real estate professional, you don't get some of those advantages. And we have a incentive bonus program that employees can buy houses at cost. And so I've got an employee that has amassed a pretty sizable amount of wealth by doing that, by buying houses regularly, renting them out. And we were talking one day, he doesn't get the same tax advantages I get. And I was just like, this just isn't right. And so it's like, I've got to figure out a way that he can have some of those same benefits, because we're in the same industry. He just gets a W-2 and I don't. And that's really the key difference. And so that evolved, and eventually we started this private equity company with the primary intent of allowing our employees and associates to be able to build wealth alongside with us. And now it's evolved to where we'll let anybody that qualifies and has the investment can now invest alongside of us and build wealth. And so that's a newer thing that we're having fun with as well.
Okay, we've got a lot to unpack here. I'm excited. So the first thing is...
I took you all over the place.
No, I love it. I love it because we speak the same language, and I've got some questions, right? Some selfish questions, which will be, I think, beneficial to people that are listening. But it sounds like you have one lead machine, right? Meaning a cash machine. And it sounds like it's the home building business. Is that correct? Is that the one that you would consider kind of like when I think about what we're building, we have multiple legs to the business, and we've got construction, and we've got property management, and we've got investments, and but our main business that spits out the cash are our real estate teams. And I'm just curious, which one do you consider kind of like the top of the spear?
Right now, you're right. It would be the home building. That would certainly be it. Yeah. Okay. Because we have apartments, but those are mostly passive. You can't say apartments are passive, but we're not involved. It's not a daily lift.
And so I imagine you and your partners were taking that cash that you were making in the home building business, and then you started buying apartment buildings. Is that correct?
Yep, that's right. Yeah. Okay.
And you start that in 2011 as well, 2012, or was that more recently?
We were 2016 when I think 2015, 16 is when we picked up our first apartment. And most of them are value add. Actually, not most of them, all of them are, where there was an opportunity to improve on what was existing.
Okay. In your backyard, or are you doing it outside of
All
your
of those
area?
are in Minnesota. Yeah.
Okay. Okay. Fantastic. So that was the first question I had. So you definitely have this one tip of the spear that like kind of feeds some of all the other businesses, right? Let's talk a little bit about the private equity that you kind of started with your employees, right? That's how you guys started it first.
Yeah.
And we set up like a little partnership with some of our employees, and we just started buying like some individual houses. I'm curious how you guys set it up, and then what it looks like today. Like how did you set it up? What was the structure like?
Yeah, I don't want to totally bore everybody with the legal details. There's a lot of legalities of, who can invest if you're accredited, non-accredited, how we can advertise it. Really simply put, we've set it up for the outside world has to be accredited. So they need to be accredited, which means they make $200,000 a year or more for the last 3 years, and it should be ongoing, or they have $1 million net worth. Internally, currently, we've set it up. We have all of our employees participate in a simple IRA, and we do matching funds. And then we teamed up with Equity Trust. They are an IRA company that the employees put their money there with Equity Trust, and then they can invest in the deals through their IRA. And so that gives them the ability to be able to invest without the tax consequences. Depending on if they do a Roth or not, they can convert to a Roth. There's tax consequences at some point, but that gives them the ability to build that wealth outside of the tax consequences that they have. And then we took that, we like it well enough that we've said, okay, also anybody that has an IRA or a 401k can also through Equity Trust invest in our deals. And so that's the early stages. The next phase that we'll eventually do is, because not all of our employees are accredited. We do have people on our team that are, but not everybody is. And so eventually we will roll it out to where, we'll make sure we're meeting the legal requirements that those employees that aren't accredited could also invest outside of their IRA. And that we're in the early stages of putting that together. And so that's going to take a little bit more time.
That's cool. That's good for us now. So you actually set up self-directed IRAs for them, all based out of that one entity, not out of the home building entity, but out of the, out of the investment arm of the business. Is that correct?
Yeah. So they're investing through Centra Capital Partners just like anybody else would, but they're doing it with their IRA, which is then managed by Equity Trust.
Got it. Yeah, we've used Equity Trust for 16 years.
Yeah.
It's great.
They're fantastic.
Yeah, fantastic. And such a great strategy for people that are outside of the industry, considered full-time, right, professionals.
Yeah.
Okay, it sounds like you guys are also building a lot of properties that investors are purchasing. Is that correct?
Yeah, rephrase. What was the question?
So it sounds like there's been investors, like you guys are building some product that have been good for investors to purchase, right? So the investor sees that there's a good rate of return on that purchase, or at least that's what I had read.
Probably two parts. We do have a fair amount of investors that are buying properties from us that are turning them into rental properties. And so we do have an element of that. We also have through Centra Capital Partners that allow investors to invest in an entire project. And so we will have a subdivision. Investors through Centra Capital Partners can invest, and then we're co-investing alongside and developing that. And so it gives somebody the ability, very passively, because they're not involved in the business. We're the general partner. We're developing, we're building, we're selling, and they can be a limited partner, an LP, investing through there. And it gives somebody the opportunity that says, I want to be in real estate, but where do I start? And I don't want to have a rental down the street that I have to worry about the furnace breaking.
Yeah, makes a lot of sense. Tell me what the numbers look like for the investors that are actually buying the physical product, the house itself. Like what does the purchase look like? What do the rental rates look like? Like give me a little bit of an understanding of that. And also, what does it look like if somebody's going to invest with you through Central Partners?
Yeah, the individual houses, it really depends on the market. We just converted, personally, I just converted a handful of houses to rentals. And those rentals, on a retail basis are selling for 300 to 350, most of them that we converted. So it's very, in this market, that would be a very entry level product. And then the rental rates that we're getting on those, it depends on the product. We're renting them for between 2,500 and 3,200 a month to the end consumer. And so, people that are buying from us, they're seeing a very similar type return and scenario.
That's great.
And then the investment into the new construction, that is they're investing in projects that we already own. We're putting in the roads, we're putting in all the infrastructure, we're building the houses, we're selling the houses. And the two currently that we're offering, one of them's got a projected based on phase one. So we're now allowing people to invest in phase two. And so based on the success of phase one is where we're getting the numbers, of actual success. In those, it's a 2-year return. So somebody invests, we should be able to build, sell, and develop everything in a 2-year period. And it's projecting a 17.8 IRR on those. And we've got 2 of those that we're offering right now. We've got a couple of more that will be opening up for investment later this summer. And so
that's fantastic.
And that's the newer thing that we're offering, that it all started. How do we allow our employees to be part of this, and building wealth? I
love that, right? It gives people the opportunity, like you said, to get into some of these projects without having to do some of the heavy lifting of owning rentals, right? Because there could be a lot of heavy lifting that's there. People are just not prepared mentally sometimes for those assets. But if they're buying new construction, right, there's less that can go wrong, like on the purchase side. Your purchase in your area, your build to rent ratio is ridiculously good, right? Like here in Northern Virginia, it'd be, 800's the build retail for a townhouse, right? Not a single family house. And maybe it's renting for $4,000. Right? And so it's just hard to make those numbers work.
Yeah, it's tough to make any money.
Yeah, hard to make those numbers work. I was just, kind of going down memory lane, and we're renovating a house that we'd purchased in 2008, where we bought it for, $150. The rents were $1,500 a month. Today, that same asset is worth $450, and the rents are like $2,300 a month.
Ooh,
right?
Not keeping up, is it?
Yeah, it's not keeping up. So, good to see on my, on my balance sheet.
Yeah.
And they've been little cash cows for us because the assets are paid for now. But it's just like, wow, it's pretty out of balance where we are, right? Hard to make the numbers work. So hence why people go to other markets, right?
Yeah.
What would be some of the advice that you would give anybody that's exploring your market for the first time? Like, why would they want to invest in your market?
One of the unique things about Minnesota is the number of Fortune 500 companies that are here and the diversity. We've got Target Corporation is based here, Best Buy is based here. So, we've got a pretty significant retail basis, and then we've got Cargill. We have General Mills, so we're hitting that. We've got Medtronic and Guidant, medical device are based here. We've got 3M, so just the number of U.S. Bank, really a diverse market. And so that's what makes us fairly unique, is that we don't have, we're not dependent on a single industry to strengthen the Minneapolis market. And as you look at '08, when the entire country really struggled, Minneapolis fared a little bit better on the unemployment rate and some of those other statistics that are indicators of the health of the economy because of the diversity that is here. And so that's really one of the greatest positives about this market is just that diversity is really uncomparable to anywhere else in the nation.
Dale, I'd love to get your perspective on where you see, to look into your crystal ball, and where you see the residential real estate market in the next few years, right? there's a lot, like you go on YouTube and there's like so much stuff about like what's happening with commercial office space, right? And I think that that's going to go through like is going through a pretty massive correction right now. But on the residential side, there's just no product, right? If I was a builder, I'd be like dancing in the street, like, doing a little jig, because I don't see where the demand is. I mean, the demand is so high. I just don't see where, especially for affordable product, like there's just nothing available.
Yeah. The biggest struggle we're seeing, you're right, there's a huge demand, there's a huge need. However, inflation is outpacing income. Mm-hmm. And then you also have the interest rates. And so part of what we're dealing with is with the interest rates going up, we don't have as much inventory listed. So, we've got all these consumers that you're in your house, you bought it in 16, 17, 18, 19, 20, and you've got a 2.5% to 3.5% interest rate. You're thinking, well, maybe I want to buy a little bit bigger house. We have another child coming. We're getting a dog. We've got a better income. But you're looking at it going, well, I've got to go get a 7 plus or minus interest rate. And it just doesn't make sense anymore. And so you say, well, I'm going to stay put and be happy with what I have. And, we do have people that are moving that, are cash buyers, life circumstances. They have to move. They're moving, whatever, new job, whatever may be the case. But we don't have that flow of existing inventory being listed. And so people that are buying a new house are really limited because that inventory is low or it's new construction. So it's really huge benefit to new construction. However, we're having to raise our prices so fast. We have a product right now that sells for about $420 that, 4 years ago, we were selling it for $300. That's massive because of the inflation. Everything has gone up to build these houses. And so that's, the unique thing that we're dealing with. And then when you see interest rates jump, everybody gets a little bit scared and you see a pause. So I'm not talking about the Fed rate, but your mortgage rates, although there's some correlation there. But the mortgage rates go up and the consumers freeze and they're like, let's see what's going to happen. Are they going to come back? Are they going to keep going up? And so you see a pause and then they stabilize or come down and then they come back, and then you see an influx. And so we've seen that. You can take our sales and you can graph that with the interest rates. Interest rates go up, sales pause. And then people come back. Interest rates go up, sales pause. Interest rates go down, everybody jumps in. And an interesting point, if you look at the history of recessions, housing's the first in, first out of every recession in the history of tracking. And so housing is a huge barometer of what's going on. And we're in a really tough place as a nation because there's a huge need for housing. People want to buy it. However, if interest rates go down, there's going to be this massive rush, which is going to drive interest rates even worse. And so it's a tough situation that we're in.
You mean drive prices even?
Yeah, exactly. That's right, Rob. Yeah. And so we're in a really tough situation that it's going to take some work to get out of this.
Yeah. How do we get out of this? Right? It's you builders have to go build more find more land, find more dirt, build more houses, right? How much does it cost you due to inflation? Like what's the cost creep been? Is it 25%, 30%? Like how much more expensive is it to build a house today than, let's say, 5 years ago?
Yeah, that's a great question. The example of we have houses that we were selling for $300 4 years ago, and that exact same house, no difference. It's in the same subdivision, same floor plan, same finishes, are now selling for $420. So we've gone from $300 to $420 in just 4 years, and that's huge. That's you take that along with interest rates, and the consumer's buying power is really getting killed.
Yeah, that's what I said. It's we have kids that are the similar in age, and I'm like, yeah. It's hard for them to buy today, and so they're getting creative with house hacking and pad splitting properties, and it's interesting. It'll be interesting to see how it all shakes out, right? I'm like, okay, how are we gonna help our daughter position herself to buy that first house or that first condo or for that first townhouse? And our area is pretty expensive. So, as parents, we're working through that right now to figure out, okay, how are we going to do this? Like, find a good deal for her. And then, she's got to earn it, though. She's got to still buy it. She's got to figure out a way to capitalize it.
Yeah, I feel I've got a daughter who actually lives not too far from you, and they're married, and it's like, it seems like almost an impossibility for them to buy a house.
Yeah, it's hard. It's hard. So it'll be interesting to see. And I think that does become the challenge, right? Interest rates dip, and then it's going to be a flood to the market. Prices are going to skyrocket, right? They're going to jump up. And so if you're an owner, like, that's a good thing, right? I mean,
Yeah.
your asset values are going to increase. Of course, you may not want to liquidate them, right? If you're playing the long game, you'll look good on paper. It'll feel good, but it'll be interesting, right? I'm trying the future, but part of the question is I'm just trying the future plan for our different businesses. And one of the areas that comes to mind is just more construction, right? There's a lot of construction. People are staying put, and they're like, okay, well, maybe we'll do the addition. Maybe we'll do the full renovation. It just doesn't make sense to buy something new. We'll just be content with what we have and renovate the heck out of it.
Yeah. Yeah. As people are sitting on the sidelines waiting and wondering, an interesting thing, if you look in the late 60s, interest rates jumped. They hit a number in 71. If you took those people that said, well, I'm going to wait until things stabilize and improve, well, you didn't see interest rates improve again until 1993.
Mm-hmm.
So that means people that are going to sit and wait for something that's going to be better and happen waited from 1971 to 1993. I mean, it's pretty easy to figure out how much they lost out on sitting and waiting. And I think it's a game of, you got to figure out good opportunities and chase them, and don't wait for the perfect, because you'll be waiting for a very long time and lose out on a whole lot of really amazing opportunities.
That's a great point. I want everybody to hear that, right? Like, we definitely want you to be buying assets, and don't wait to buy real estate. Buy real estate and wait. It kind of goes back to that whole
exactly
adage, right? It goes back to that. Well, Dale, I'm curious. What's the biggest challenge that you're facing in your business today? Like, what as one entrepreneur talking to another, and there's other business owners that own assets and are building within our community. Like, what are some of the struggles that you've experienced as you've scaled your business, and maybe some lessons that you've learned along that way as you scaled and built your business?
Yeah, I think surrounding yourself with amazing people. I mean, that could be the hardest thing. Is you've got to really invest in top talent. And we're in a position where we're in a really good position. We've got a lot of amazing talent. I'm surrounded by a lot of really smart people. But there was a period of time where it's like, well, I can't afford the best. Mm-hmm. And now I look back and go, oh, that really hurt my growth, of thinking small. Mm-hmm. And so that's the biggest thing is, as I look back, if I did differently, I would worry more about investing in my people and investing in getting really top talent. There's a lot of people in our company that have experiences that I have no idea how to do what they do, and they're helping us propel this company forward and doing some really great things. And that's really, and early on, that would be an area I was really short-sighted is really invest in top talent. We've always invested in their education. That's been important. But you've got to make sure you've got the right people in the right positions. Sometimes we're trying to put somebody that's really talented into the wrong position. Mm-hmm. You've just got to make sure they're in the right position. I would say that's probably the area that, if I look back, that I could have and should have done a lot better.
Yeah, we realize that we're really a people development business disguised as a real estate company.
Yeah.
And that our job is to put people in places where they can succeed. And I echo that sentiment invest in people. Like in the beginning, we're always so afraid of what we're going to lose or what we can't afford, when in reality, the wrong hire just keeps your ceiling super low, and doesn't give you the ability to build a big business. But it's scary for a lot of people. I get that. I mean, I tell the story of like the first bookkeeper I ever hired. It was like, I looked at one that was $60 an hour and one that was $30 an hour. And as a baby fresh entrepreneur, I'm like, I need to save the money. And I went with a $30 an hour person who just started their QuickBooks training. They did our books for an entire year. I didn't know anything about running financials at the time. So the person did them all wrong. And then I had to go back, hire the person at $60 an hour to fix all the stuff that the $30 an hour person did. It was a nightmare, right? And so there's some things you just never want to skimp on, right?
Yeah.
Like professionals pay for themselves 10x. Right? You put the right people in the right room, for sure.
Yeah, there's a book that Benjamin Hardy wrote called Who Not How that I love. That talks about that principle. Have you read that, Rob?
Oh yeah. It's that. I read it a couple years ago, and I remember feeling and being like, "This is the best book I've read in a decade." Right?
Yeah.
And the concept is kind of a simple concept, but they really cement and drive why it matters so much. And we're always trying to solve the problem ourselves, when in reality it's just like we just need to find the right who's in our life that can help us get there.
Yeah, I got done reading it and I thought, it's so obvious and simple. How come I didn't get this? And I needed a book to tell me. But it's been amazing for us as you apply the principles.
100%. Well, Dale, if somebody wanted to find you online, right, how would they do so?
Me personally, probably the best way is LinkedIn. If they just type Dale R. Wills. If they're looking for our company, we've got centracapitalpartners.com, which is the investment arm. If people are looking at that, and then if they're looking at the home building, it would be Centra Homes. But me personally, LinkedIn's a great way, and the investment, it's centracapitalpartners.com.
But Dale, I appreciate you pouring into us for the last hour. Definitely a pleasure. It hasn't been an hour, but
I'm having to look at the time on this one really fast. It was a lot of fun.
Hasn't been an hour, but within the last hour, and I appreciate it, man, so much. And I know our grid community does as well. I want to make sure that if people are looking to invest outside of their particular area, to hit up some of the people that we have on our podcast to learn about the particular markets, because they're experts in their markets. And Dale is certainly an expert in his, and we appreciate having you, Dale. Thank you so much.
Thanks for having me, Rob.
My pleasure.